Monday, this is real life here. We had this segment, Scott Carty from Carty Capital Management. We had this segment set up for September because September is Life Insurance Awareness Month, but then a baby happened and things got kind of pushed back. So we're touching on it now, which actually is a little bit better because now that I have a baby, life insurance is on my mind more. So what we're doing today is we're getting a little bit of a school-type lesson on the different types of life insurance and which one might be best for you and your family. So Scott, let's talk about the different types that we have.
Yeah, life insurance is very important, especially usually it gets triggered when something like this happens, like a baby or a job change or something. But there's three different types of life insurance that we're going to discuss. Okay. The first type is the most common, and that's term. Okay, this is what most people think about when they think about life insurance. And we're going to kind of go down this graph chart and show you the different types and how they're different from each other.
So up top you've got term and then two different types of permanent policies, and on the side premium, coverage, death benefits, cash value, advantages, disadvantages. So for term, go ahead.
Yes, and you and I have talked about this quite a bit, and because it is very complex, we're going to keep this very simple so that everybody can kind of follow along with us.
Okay.
But with a term policy, the premium, the money that you pay for that life insurance, is fixed for that period. Okay? The coverage is for a set period of time. It can be up to 30 years. The death benefit is guaranteed. Your death benefit won't change with a term policy.
What does death benefit mean?
It's how much money your spouse is going to get when you pass away. Okay. Yep. There is no cash value with a term policy. It's not a savings type of vehicle at all. Mm-hmm. All right? So one of the advantages of a term, really the main advantage, is you get the maximum amount of coverage for the minimum amount of premium. Okay? And we'll dig into that a little bit more as we keep going. But the disadvantage is it's not for a lifetime. You set a period of time that you want this term to play out.
So term seems a lot like car insurance.
Absolutely.
Okay.
Yeah, you pay for it, and as long as you're paying for it, you get that benefit.
But if you don't die, then it's just money out the window.
Correct.
Okay, so the other ones are not like that.
Yeah, just like with car insurance, you pay for it, hoping you never have to use it.
Yeah.
But so the other disadvantage is there is no cash value. Okay, this isn't a savings type of vehicle. This is strictly life insurance.
Okay, the other ones do have cash value, so let's get to those.
Yeah, so the other two are the most common types of permanent policies. Okay, whole life has a fixed premium, so the money that you pay to the insurance company will never change for the life of your policy. The coverage is for the rest of your life, so unlike term where it could end and you would have to renew it or lose the benefit, you have this for the rest of your life.
That's what you mean when you say permanent?
Permanent,
okay.
Yes. So the death benefit is guaranteed. It will not change. So if you buy a $100,000 policy, it's going to be $100,000 for the duration of that, for the rest of your life.
Okay. And that's the cash value that comes along with it?
Well, no, not necessarily. Okay. The cash value is a little bit different because you can borrow against this, you can use that money, but that is separate than the death benefit.
Okay, and then so the advantage of that is you can borrow against that money. You have a little bit of a savings account.
Yeah, so with both of these, there is cash value that you can pull from and use that will affect the policy, and that's one of the things we're not going to quite get into today. But so there's cash accumulation in both of these policies. It's for the rest of your life. But the big difference between whole life and universal life is the fixed premium. Okay. The premium never changes for that policy. That is also a disadvantage as well. So if life changes and you lose an income or you lose your job, whatever it may be, you cannot change the premium on this whole life policy.
Okay, so what I'm kind of getting here is permanent versus term. Each has its advantages and disadvantages. So which one's better than the other?
Well, it's going to depend on each individual because all of these are for a specific period of time. I wish there was a cookie cutter answer that I could just tell you if you were 30 years old, you should get a term policy, or if you were 50, you should get a whole life. That's not the case. So it's a good idea to talk to a financial professional and go through your situation, your unique situation, and figure all of this out.
Right. So as is the case with a lot of our money segments, it comes down to what your financial need is, what you're looking to plan for the future, and where you are right now. If people have any questions, how can they get in touch with you guys to ask more about this?
Yeah, you can go to our website, which is cartycapital.com, and there will be tons of information, including a life insurance calculator to help you figure out maybe how much, in a general way, life insurance you need.
Okay, perfect. And we'll put all that on our website as well, fox2detroit.com. Guys, back over to you.